This is the AI News Flash for April 27th, 8 a.m. UTC. First up, China's DeepSeek released a new AI model, but the market reception was underwhelming. Reuters reported on April 27th that DeepSeek's latest model failed to deliver the kind of breakthrough that shook global markets when its R1 launched in January, with benchmarks showing only incremental gains over rivals. The backdrop is a brutally accelerated competitive cycle. Alibaba's Qwen 3 5 moonshots Kimi Zhipu's GLM, plus OpenAI's GPT 5.4 and Anthropic's Claude Opus 4.6 are now updating faster than once per quarter, compressing the differentiation window for every frontier lab. Differentiation by parameter count or benchmark scores alone is becoming insufficient. Use case specialization, cost structure, and ecosystem integration are emerging as the new battlegrounds where AI model leadership will be decided. Next, a homeowner near San Francisco is trying to sell his $8 million Mill Valley estate in exchange for Anthropic equity, a deal structure highlighting how concentrated AI wealth has become. CBS News reports that Storm Duncan, founder of Ignatius, wants to swap his 14-acre estate for Anthropic stock, held by employees of the AI unicorn, rather than accept cash. Duncan said, quote, "I felt underexposed to AI, which is the future in my mind, and overexposed to real estate. Everybody's anxious that you're either in AI or you're going down." End quote. No serious buyers have emerged yet, but the case illustrates how Silicon Valley insiders increasingly treat AI company shares as quasi-currency, raising deeper questions about what wealth itself means in a frontier AI economy. Third, Big Short investor Michael Burry has soured on Palantir Technologies and opened a fresh stake in Salesforce, one of the most beaten-down AI software stocks. According to the Motley Fool, Burry is wary of Palantir's forward price-to-earnings ratio of 106 times and the rising risk that AI agents could erode the growth runway for its commercial AI platform. On Salesforce, Burry sees a more visible near-term path to earnings growth, citing the massive installed base and a proven ability to cross-sell AI modules like Agentforce into existing customer contracts at more reasonable valuation multiples. With the so-called SaaSpocalypse hammering software stocks, investor views on whether AI agents are a threat or tailwind are sharply diverging, and Burry's contrarian bet may accelerate selective rotation back into AI software names. Finally, AI data platform Vast Data closed its Series F at a $30 billion valuation, more than tripling its $9.1 billion Series E valuation from late 2023. Drive Capital and Access Industries co-led the round, with NVIDIA, Fidelity, and NEA also participating. Approximately $1 billion in primary and secondary capital was raised. Vast has accumulated over $4 billion in cumulative bookings, exceeded $500 million in committed annual recurring revenue, and turned free cash flow positive. Customers include CoreWeave, Lowe's, the U.S. Air Force, Cursor, Mistral AI, and Crusoe Cloud, supporting environments spanning millions of GPUs globally. Built on its proprietary DACE architecture, Vast's AI operating system unifies data, compute, and real-time processing into a single platform, cementing its position as critical data layer infrastructure as hyperscalers continue spending over $650 billion on AI capacity. But that's all for this AI News Flash.